Hey everyone, welcome back to Corporate Decoder. Today TMHC just filed an 8K about their acquisition, and I am seeing one major consequence that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing signals the end of TMHC as a public company, and the immediate shift in control and its impact on various agreements. Alright, let's dive into this filing from Morrison Home Corporation, or TMHC as it is known. This is a current report, basically an update on major events, and the big event here is the completion of a merger. They've been bought out by Berkshire Hathaway Incorporated, so Morrison Home Corporation is now a wholly owned subsidiary of Berkshire Hathaway. This happened on the 24th of July 2026. It means the days of TMHC trading on the New York Stock Exchange are coming to an end, which is a pretty significant change for the company and its shareholders. Now, when a company gets acquired, a lot of existing contracts and agreements need to be adjusted. This section talks about some of those adjustments. They entered into what are called supplemental indentures. Think of these as official amendments to existing debt agreements, specifically for their senior notes that are due in 2028, 2030. And 2032, what does this mean for investors in those notes? Well, the key change is about reporting. Usually companies have to provide detailed financial updates to bondholders. With this merger, TMHC will no longer have to do that if Berkshire Hathaway provides a guarantee for these notes. Instead, they'll just use Berkshire Hathaway's public filings. This simplifies things for the company, but means the note holders will rely on Berkshire's reporting from now on. It also adjusts some rules about asset transfers related to parent companies. So beyond the bond agreements, TMHC also amended its main credit agreement. This is essentially a loan agreement. The big deal here is that Berkshire Hathaway is now recognized as a permitted holder. What this does is prevent Berkshire Hathaway's acquisition from triggering a change of control clause in the credit agreement. A change of control clause usually means that if the ownership of a company drastically changes, the company might have to repay its loans immediately or face other penalties. By adding Berkshire Hathaway as a permitted holder, they've effectively smoothed over that potential issue, making the transition cleaner. This amendment became effective right when the merger was finalized. This is the core of the filing. It confirms the merger is complete. What happened to the shareholders? Each share of Morrison Home Corporation common stock that was outstanding before the merger officially closed was converted into the right to receive $72.5 in cash. This is the per share merger consideration. It is important to note that this payment is after any applicable withholding taxes. If you've held TMHC stock, this is the cash you'll receive for your shares. The filing also details what happened to employee stock options, restricted stock units, deferred stock units, and performance stock units. Generally, these were either cashed out based on the $72.5 per share price or converted into cash awards that will be paid out over time, sometimes with continued employment requirements. As a consequence of being acquired by Berkshire Hathaway and becoming a wholly owned subsidiary, Morrison Home Corporation common stock is being delisted from the New York Stock Exchange. They've already notified the NICE and requested that trading be suspended. The actual delisting will be effective about 10 days after they file a specific form with the Securities and Exchange Commission. After that, TMHC plans to terminate its registration and suspend its public reporting obligations with the SEC, as it will no longer be a publicly traded company. This is a standard procedure after a buyout. This section essentially reiterates that the rights of the former shareholders of TMHC have changed significantly. Their ownership of the company's stock is now converted into the right to receive that cash payment. They no longer hold shares in a publicly traded company. This is a clear confirmation of the change in control. Berkshire Hathaway now owns Morrison Home Corporation. The filing notes that as a result of the merger, TMHC continues to exist, but as a wholly owned subsidiary of Berkshire Hathaway. With a change in ownership, there are often changes in leadership. The filing states that upon the merger's completion, the entire previous board of directors of Morrison Home Corporation resigned. These resignations were not due to any disagreements. The filing also mentions that the directors of the acquiring entity, Merger Sub, temporarily became directors of the surviving company. Then new directors were appointed to the board, including Cheryl Palmer, Todd Merrill, Kurt Van Hifte, and Eric Huser. Similar changes likely occurred at the officer level, with the new owners having the ability to appoint their preferred management team. Following the merger, the company's foundational legal documents, its certificate of incorporation, and bylaws have been amended and restated. This is normal practice to reflect the new ownership structure and governance. These documents are filed as exhibits to this report and lay out the new rules for how the company will operate under Berkshire Hathaway's ownership. To cap it all off, on the 24th of July 2026, Berkshire Hathaway and Morrison Home Corporation jointly issued a press release announcing the completion of the merger. This is their public announcement to the world that the deal is done. This exhibit is the original merger agreement. It details all the terms and conditions under which Berkshire Hathaway agreed to acquire Morrison Home Corporation. It was filed earlier, but it is referenced here as the document that governed this entire transaction. This is the amended and restated certificate of incorporation. It is essentially the company's constitution, updated to reflect the new structure after the acquisition. And this is the amended and restated bylaws. These are the internal rules for how the company is run, also updated to align with the new ownership. This exhibit is the 8th supplemental indenture related to the 5.75% senior notes due 2028. It details the specific changes to the terms of those notes, particularly concerning reporting requirements, as we discussed earlier. Similarly, this is the 6th supplemental indenture for the 5.125% senior notes due 2030, outlining the updated terms. And this is the 2nd supplemental indenture for the 5.750% senior notes due 2032, also reflecting the post-merger adjustments. This is amendment number 1 to the 2nd amended and restated credit agreement. It is the document that officially recognizes Berkshire Hathaway's status and prevents the merger from triggering a default on Taylor Morrison's loans. This is the press release issued by both companies on the 24th of July 2026. It is the official public announcement of the merger's completion. So what does this all mean for Taylor Morrison Home Corporation? It is effectively the end of an era as an independent, publicly traded company. The acquisition by Berkshire Hathaway means a significant change in governance, financial reporting for its debt holders, and leadership. For shareholders, it is a payday, receiving $72.5 in cash per S-share. This is a pretty straightforward example of a company being taken private by a larger conglomerate. The structure of the deal and the subsequent regulatory filings are designed to ensure a smooth transition and to comply with all the necessary legal and financial requirements. The key takeaway here is that Taylor Morrison Home Corporation is now part of the Berkshire Hathaway empire, and its public life has concluded. The risk for any company acquired by a conglomerate like Berkshire Hathaway is always strategic alignment over the long term, while the immediate financial outcome for shareholders is clear. How the former Taylor Morrison business will be managed and integrated within Berkshire's vast portfolio is the ongoing story. For the debt holders, the transition to relying on Berkshire's financials offers a strong guarantee, but they lose direct insight into Taylor Morrison's specific operations. What I am actually looking for next is how Berkshire Hathaway decides to leverage or operate this home building segment within its broader strategy. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.